Welcome Web3 CEOs and CFOs. Are you establishing an accounting system for your Web3 business, but you're concerned about ensuring overall accuracy and due diligence? Look no further. In this video, I'm going to go over the most important steps and tips for reconciling your accounting system for your Web3 business. So there's three main phases when it comes to your accounting system as a Web3 business. And this comes after your initial setup. You're going to have your categorization phase, your reconciliation phase, and then your final due diligence phase. Once you go through these steps, you should be confident that your accounting system is accurate. So let's go over each step. The first step is the categorization phase. And just as this sounds, we're going to be compiling, normalizing, and categorizing all of your transactions across all of your non-custodial wallets and all of your centralized exchanges. Now, obviously, we want to use a subledger that we've selected for your accounting system to help us with this process and to leverage some of the APIs that they provide and some of the automation via journal entries to bring some of this data into the subledger and eventually into your general ledger. So step number one is putting this together, getting all of your transactions in one subledger, and then going through and categorizing them appropriately based off of their overall fact pattern. So, if you have income, this should be categorized as income with the correct price and the correct amount be treated as income and then carried into your cost basis. If you're trading one crypto for another, we should categorize this as an exchange, and the associated gain or loss should be calculated for that transaction. Similarly, if you're paying an employee in crypto, that's going to be a spending transaction. That should get categorized appropriately, and then we should calculate any associated gain or loss associated with you spending that crypto. So really, the first step is identifying the types of transactions that you have and then categorizing them appropriately. The next stage is your reconciliation process, and this is really where the rubber meets the road. Regardless of the accounting softwares that you choose, none of them are gonna 100% fully automate your accounting. None of them are gonna make it so you just plug your wallets in and you get everything accurate. So after you've taken this first step of appropriately categorizing every transaction within your accounting system, we need to reconcile these transactions and fix any issues that are apparent related to the data that came over in the accounting APIs or just your initial categorization related to any of the transactions. You want to follow a very methodical approach with this and look at each factor that can impact the overall accounting accuracy, starting with the asset pricing and valuations that you're applying to each specific transaction. Now, a large degree of this is going to be automated by your accounting subledger, but we want to take the step to investigate what their approach is to applying valuations to transactions. So where are they sourcing their pricing data? What type of pricing method are they using in terms of looking at daily averages, close, or a specific transaction timestamp? So we want to look at just overall what is the pricing discovery and what's being applied to specific transactions. We want to be very careful with this if we're on dealing with a more obscure asset or on a more obscure exchange. This becomes even more important. After we look at asset pricing, we want to look at overall categorization and tax treatment to ensure that we're not treating something as income that should be a purchase of crypto. We're not treating something as an expense that's actually a distribution. We want to make sure that we're applying the correct tax treatment to each specific transaction. Then we want to get into investigating our gain or loss report, paying special attention to your proceeds and your cost basis. Specifically, if any of these are unmatched, meaning you have zero proceeds where you're selling an asset and it has a cost associated with it, or vice versa, where you're selling an asset for an amount of money that has a value associated with it, but it's showing zero cost, oftentimes this is indicating that there's something wrong within your accounting system that needs to be investigated further. So if there's anything that's unmatched within your gain or loss report that's overstating or understating your proceeds or cost basis, this is something that we want to investigate further, that we want to ensure accuracy with. And you're going to have to dig into those specific transactions and try to identify what that specific issue is. Then the next thing that we want to check is our calculated ending holdings, and we want to compare these to our detailed ending holdings. So this, for some reason, is something that I see go overlooked a ton, and it can cause huge issues both for the accuracy of your current year accounting, but also for the accuracy of your accounting in subsequent years. Because when we're looking at your ending cost basis, that's the starting point for next year's calculation. So there's this cumulative nature to tracking your cost basis data over multiple years. So you want to pay special attention to comparing your calculated ending holdings at a detailed level on an asset by asset level to your actual ending holdings that you just save in your records and documentation. And to the degree that any asset is overstated or understated, you should investigate that further to determine, are you missing a wallet? Is there a double count in your accounting system that's overstating something? Or is there some other issue within your accounting that is creating this inaccuracy that you need to address? Once we've ensured the accuracy via this reconciliation process with your activity within your subledger, then we also want to do a deep review and due diligence on the journal entries that are going to be going from your subledger into your general ledger to report your overall gain or losses, income, and spending. Now, there's different approaches to how we have these journal entries actually get booked into the general ledger. It's going to depend on the overall volume of your company's activity, but we want to verify these for accuracy to ensure that the information that we're integrating into your general ledger is going to be consistent with what we have accounted for and reported at the subledger. So we want to, as a last step, review this for accuracy. So once we've done the initial reconciliation process, and that reconciliation process is very much focused on your subledger. We're not really going to get into your general ledger too deeply, other than just verifying your journal entries from the subledger for purposes of this conversation and this video. So once you've done that step, now we move into the due diligence phase, which really is our last step in verifying the overall integrity of the accounting that you've done. So we want to look at the tax positions that we've taken for any given transaction that we've accounted for the year, and we want to review those tax positions to make sure that they're going to stand up to the tax standards that we need to meet when we're filing a return. Once we confirm that they do, we want to take the additional step of creating contemporaneous documentation that outlines our tax position. And we want to save this documentation with the rest of our accounting system. This will go a long way in an audit if we need to defend a position that we took. If in addition to our accounting records, we have contemporaneous documentation, it's going to show our reasoning and forethought in the position that we took. Another thing I want to point out is that, again, we never want to just rely on a software to do our accounting. This reconciliation and due diligence process is key to ensure overall accuracy. So don't fall for the belief that you can just plug and play, download your wallets, print out your financial statements, and have something that's accurate. In addition to just ensuring overall accuracy, it's always a good point during this phase to just do an overall check on your internal controls and understand who has access to your accounting systems, who has access to your wallets and your payment systems, and just check this to make sure that there's no one that has access that shouldn't, or vice versa. And overall, through this process, you do want to use as many reconciliation tools and automation tools as possible, but it always comes back to this due diligence and making sure that you do these final checks to ensure accuracy in your accounting system. So it is key, if you're going to have an accurate accounting and tax system, to have a proper record keeping system. Now, a lot of the record keeping is going to be put together at the subledger when you're going through this initial accounting process, but it's important to understand the type of information that you're going to want to save and need. And it's also important to not just leave this information saved in a software or saved with your CPA. You want to really make sure that you're saving a copy of this in your permanent record. So you should be downloading all of these reports, or they should be getting provided to you. And you want a consolidated list of all of your transactions for the year across wallets and exchanges. You want a detailed summary of every transaction where there was a gain or loss, income, as well as spending, and all of these reports should have an audit trail so you can track and trace the source and flow of each transaction. Then in addition to this, you want a detailed summary of every journal entry that went from your subledger to your general ledger. And then finally, we want a detailed ending cost basis report at the tax lot level. And hopefully you've already went through your due diligence checks, you compared this to your actual, and we know it's accurate. But we want this detailed ending cost basis report at the tax lot level, because this ensures that we're not captive when it comes to data outside of just overall just accuracy. And the reason why is because that detailed ending cost basis report, that's what we'll use for the next year as our starting point. So if you don't want to go back to the same CPA, you don't want to go back to the same software, you want that detailed ending cost basis report so you can take this ending information and roll it into a new system, so it can be your starting point for the next year if you do want to switch providers. Now, one of the final considerations for reconciliations and ensuring overall accuracy is reconciling the 1099s with your accounting and overall tax reporting. You can have an accurate accounting system, and then when you go and report it for your taxes, you can still overstate or understate your overall positions. And how does this happen? Because of 1099s. 1099s are third-party reporting that gets sent to the IRS for activity that you've either completed on an exchange, buying and selling crypto, or if a third party has paid you, they also may file a 1099. So this information goes to the IRS, and then you get a copy, and you need to file that 1099 with your tax return. So you want to be very careful that this 1099 gets reconciled with your accounting records. For instance, if you're receiving income that's getting reported to you on a 1099, that income is also going to be getting reported in your accounting statements. So you don't want to go and report it twice on your tax return, but you also don't want to just report it from your accounting and leave the 1099 off and risk getting a tax notice for understating your taxes based off of the perception of the IRS. So it's important that we take these 1099s, we reconcile them with our accounting information, and then we properly report both the 1099 and the rest of your accounting activity without overstating or understating the overall tax reporting. Are you looking to have a CPA manage your company's accounting system, a firm that understands digital asset accounting and Web3, that can set up an accounting system for you and properly maintain it to ensure overall accuracy and peace of mind? If so, look no further than Camuso CPA. We can set up a Web3 accounting system for you and continue to manage it to ensure overall accuracy. If this is something you're looking for, reach out to me and my team at camusocpa.com, and I'd be happy to schedule a consultation to sit down and discuss your business in detail to see how me and my team can assist you from a tax and accounting perspective. Until next time, I'm Patrick Camuso, signing off.